Hello and welcome back guys to the channel, and this is basically going to be the last part of the MMC footprint strategy breakdown, which will be the part 4 and the final chapter of the strategy breakdown. But before we get into it, make sure you have subscribed to the channel to get further notifications on the latest content that we release on day-to-day basis. And once you've done that, turn that bell button on. Now let's get into it. So on the basis of the MMC footprint strategy, it's basically like the same things that we've been talking about over and over and over again, right? So we have our three main things that we focus on, which is structure, S&D, and confirmation, right? So this is the overall background or backbone of the strategy, right? Everything relies on these three major things, right? Every single thing that we look at, we anticipate, and we do is rooted or embedded with these three things, right? So these are our main guidelines towards the right approach in this market that we use on day-to-day basis, right? And this suits every type of trader that is out there and every single market plus any single time frame, right? This it happens everywhere. It is what it is, right? I've been talking about this over and over again, showing you guys multiple examples on how this is done. So uh, the rest of it is just commitment and belief, right? So yeah, that's enough pep talk for now. So let's just get into it, right? So today I was looking at different pairs, but these have been my main pairs that I do trade, that big time, right? Because I mostly like to leave my watch list there, no harm done, right? So I was during the last webinar with my guys, we were breaking down these pairs, right? These pairs that we trade every single day, every single week, every month, and probably every single year, right? So on the cases of Euro USD and Pound US Dollar, we did say that we have been bullish, we are still bullish, and we have been bearish, we are still bearish, and we will still continue to be bearish. Why? Because the market is still giving us bearish pushes, and there's nothing telling us otherwise apart from that, right? So ever since like big time, right? So price has just been making these bearish moves, right? So as you can see, right, price has simply been making lows and taking them out, right? Making new lows and taking them out. So that's what we have been doing, and that's what we're still doing, and we'll still continue to be doing that. And as you can see, right, so this is like from my most recent price action. As you can see that this low has been taken out with the formation of a new low, right? And from this formation of the new low, right, we had this supply zone there that was perfectly mitigated with this wick, and we did break this down with the guys in the community that would possibly have something like this, right? So price has made a low, and now it's come back to do that mitigation. So once that mitigation is done, we'll now see probable breaks of structure, which the first one will be the change of character, that retest in towards and mitigate its supply zone in there, and then that break again, which will form that break of structure there, probably another retest before now price just continues to run down and take that low as its next liquidity run area. And that is exactly what managed to happen. So this is it's just Monday today, so we still have the whole week to keep going short on this thing. So boom, right? So this was like today. So we had this break here, that break of structure, meaning that a new low was now formed with this as its high. Lo and behold, we did have an unmitigated supply zone in there, supported with imbalances below it. Lo and behold, price came up, mitigated those imbalances plus the supply zone itself, and now we're starting to see those shorts coming in, and that's what we're anticipating from this pair throughout the week, right? With this low here as its next liquidity run area. Now, with that being said, that's just the case of Euro US dollar. So now checking on Pound USD, right? So these pairs move just about the same direction, unless there's an S&T divergence or some shit like that. So lo and behold, boom, we had that supply zone that was perfectly mitigated after this break here happened, right, with the creation of this low from this high. So now once this had been done, we started looking now for bearish opportunities where, you know, I go in today here and I got stopped out. My stop loss was a little bit too naggy, but you know, it is what it is, right? It's part of the process. It's what we signed up for as traders, but you know, that doesn't matter. Entries are always there, right? So, you know, we will have a move like that, you know, that retest, and then, you know, opportunities are always there, right? Because we expect this market to be short. Lo and behold, it will be short. But that was just the case of pound US dollar. Now, this is where, you know, this video will mainly be focused on, and this is EJ. It's a pair that I've been talking about a lot, and it's the same pair that, you know, we did do a breakdown of this pair, right, in the last video, right? The MMC footprint strategy breakdown part 3 was mainly based on the breakdown of this pair, right? How did we trade it? How did we manage to catch that trade, which, by the way, has now hit its take profit area, and this is a perfect 1 to 35 risk reward ratio as displayed in the screen, with the minimum stop loss of 7 pips and the actual take profit target of 250 pips, making it a total of 1 to 35 trade, right? So, you know, you get 35 times more, meaning that you get 35 times more than what you risk, right? So if you risk $10 in this trade, you could have ended up with $350 in your pocket. But you know, on the part of risk management, that's all up to you guys. You know, every man for themselves in that corner. But all in all, I just want to cement what I've taught you guys throughout, and you know what still I'm gonna be talking throughout, right? So our same 3 rules, right? Nothing ever changes, right? So we need to see that structural narrative, right? We need to see what the S&D point, right? Once we have identified our structural narrative, and then confirm that trade when everything is done. So with the structural narrative being pushing bullish, right? And as you can see, I don't need to mark like everything in here, right? If you don't know how structure moves, make sure you have watched my order flow videos. Quite very helpful in that aspect. So with structure pushing bullish, why? Because we now have a breakout structure from this low coming to create this high here. So from that area now, we do already have our structural narrative pushing bullish. So if we are having a structural narrative pushing bullish, then our main focus is going to be with the demand zones, right? So lo and behold, there you have it, your perfectly unmitigated demand zone, right? Boom. So let's call this a demand, right? So this is the zone that we want to see price come down, right? Price come down, mitigate, and once that mitigation is done, to accumulate and then, you know, head to the top side with this high as its next liquidity run area. Now, with that being said, that is exactly what price happened, right? There's no need for me to use that replay because, you know, like everything has been said previously. This is just me making, you know, cementing this idea and everything that I've been speaking about this better into the minds of you guys, so that, you know, you could get a further more clear understanding of everything that we're doing here, right? So from this area now being our okay, I thought I marked this. Okay, so let's mark this as our demand. Boom. So this being our demand, right? We expect price to come mitigate this area. Lo and behold, price comes, mitigates, and makes a little bit absorption, right, with this wick here. And if you don't know what absorption is, I'm not going to talk about it in this video, but make sure you go back and watch my absorption and displacement video. That will be very helpful to you, and make sure that, you know, we're on the same page here. So once okay, so once that once this mitigation happened, we now started to look for bullish opportunities, right? So now we start refining this this zone, and, you know, like everything in here, in order for us to get that most potent zone, right? Lo and behold, there's no need to use all this zone, right? You could just refine it, right? So let's use this last down move before the up move, right? Boom. Lo and behold, that wick comes, taps into that refined zone perfectly, and then does what? Leaves, right there. So lo and behold, when price leaves, right, it's breaking some intermediary highs in here, right? Let's make this a little bit wide. Boom, so, right? So this is a high in the lower time frames, right? And this is its low with its high that comes to make this low, right? So lo and behold, we do have a break here and a potential break there. So now with already having a break of structure, right? So this is like a break of structure. Sorry, that writing is a little bit awful. Let me just remove it. So that's a break of structure. And once you have that break of structure, you'll be waiting for what? For a retest, right? For a probable retest at the unmitigated areas of price action. Lo and behold, that mitigation happened. Now from that, we do have this intermediary trend being put into place, right? So price from here comes and makes this low, this intermediary high, right? Intermediary low, intermediary high, and then intermediary low, right? And price now comes up. With price coming up, it's already breaking this intermediary high, meaning that within the intermediary trend, that is a break of structure. So from a break of structure, we're anticipating the same thing, right? So structure pushing bullish, then there's probably going to be a demand zone here, probably supported with imbalances above it, right? That price is gonna come down, mitigate, and once that mitigation is done, price can now accumulate and go to the top side, aiming at this as its next liquidity run area. Lo and behold, that is exactly what happened within the lower time frames, right? So now let's refine this and see what actually happened. So we had this break here. Boom. So yeah, let me just zoom out. Let me reduce some of this shite in here, clear that, and clear these two guys here. Okay, just leave them. So boom, lo and behold, we did have the structural break here. Now from the structural break, that made our three rules to be complete, right? So now we have a break of structure, as I said before. So the next thing we're going to look for is that demand zone. Lo and behold, this is our demand zone, right? And after now we know what our demand zone is, then what we'll be waiting for is that pullback to happen. Lo and behold, that pullback to come mitigate this demand zone. And once that pullback touches our demand zone, this is now the area that we can look for that lower time frame confirmation, right? So when price reached here, okay, so let me cut this there. So when price reached here, now let me go. I used the 1 minute to take this trade, right? Boom. So this is the zone, right? This box here. I mean, the color is a little bit different, right? So as you can see, price is pushing bearish, and from this area here, we now have what? So price makes this low, and from this low, notice there's what? There's this high that is broken by this high, meaning that price is now starting to put new structural highs. One, right? So that's confluence one. The next thing you know, okay, sorry, pardon, I had a call. So yeah, as I was saying, you now have a break here. Now the next thing you know is what? The time, right? So I'm gonna break this down to every single aspect that I use in my trading, right? I always take my entries during session opens, right? So during this session, I managed to catch a sell. I believe it was in here, right? So this was like the London Open, right? This was like 11 a.m., right? 11 a.m. my time, right? So price made a certain intermediary breaker structure there, that retest, that sell, and then that continuation down. So from that, we now had a breaker structure. Now, what we were waiting for is that retest to where? That unmitigated demand zone for us now to catch the continuation where bullish, right? And that happened, right? So price came down to mitigate this area and then left. But I didn't take this trade here. Why? Right? Because it was like 1 p.m., 13 hours my time, which is during the end of the London session, right? So I was still waiting for the New York session to open for me to be able to catch this trade perfectly according to my rules, right? So what we did was wait, right? So we waited until the session opened. Lo and behold, so this was like 16 hours my time here, right? So this is like 4 p.m. And what we had here was this break of structure here, right? Because price made this break. So price made this break here, this break, right? From this low forming this high, right? And from that high, we now had a low, and then that break here, right? So this break forming this high. So now we know, okay, so we have, okay, let me clear these and, boom. So now we have a low here and a high here, right? With this break of structure right here. So that means the structural narrative is pushing what? Bullish, because we have a break of structure to the top side. So the next thing we're going to look for is what? A demand zone, right? Supported with potential imbalances above it, or price gaps. And if you do not know what those are, make sure you have watched my imbalances video in order for you to be on the same page here. So the next thing that we're going to wait for is that what? That pullback to come, do this mitigation, and once that mitigation was complete, then we can catch a trade here and take price to the top side, right? Lo and behold, that is exactly what happened, right? So from this high, price came down and tapped to our demand zone. Lo and behold, so this was my entry here, my stop loss below the demand zone, or you can put it below the low, right? So that's the part of risk management, is all up to you. So this was how my trade was set up. And from this area here, I was now confident, okay, so let's see now how price plays out. So let me zoom in, zoom out, pardon. Let me zoom out and see now and play this price action for you guys to be able to see it, right? So let's now put in the 15 minutes. So this was like my overall trade setup. This is how my trade setup was, right? So we had this high as the next liquidity run area. We also had this intermediary high here as the next liquidity run, but I always take partials along the way. I took partials here, I took partials here, and the last one here, right, at my TP. So this is how my trade was set up, right? So lo and behold, let's now play it and see how it ran, right? Boom. So this is how my trade was moving, right? So price just went up and started playing around in there, making highs and lows. That is how price moves, right? We don't expect price to just go in one direction, like for the whole week, right? Or for the whole day. That's not how price moves. Price makes highs and lows, engineers, and takes liquidity over time. So lo and behold, that's how my trade played out. So boom, back to live price action there. So this is live price right now, and this is how my trade played out. A completely fantastic 1 to 35 RR trade that has been won, and we'll still continue milking these guys. So I hope you enjoyed the video. I hope you enjoyed the content. I hope you learn a lot from this overall breakdown of the strategy from part 1 to now part 4, ending or completing the series. So with that being said, guys, make sure you like the video if you did like it. Also, leave me a comment down below if you didn't like the video, or if you have like any suggestions on what we should speak about or talk about more in this channel, so that you guys are our main target, right? We want to help you guys grow and level up your trading, just as we did. So feel free to be to give us any comments in the comment section, and we also recommend the best brokers that we've got in the description below. With that being said, guys, that will be all from me for now, and until the next time, guys, stay safe and peace out.